Have you ever stopped to wonder why 25,000 Iraqi dinars only amount to around $48 in US dollars? If that number makes you pause, you're not alone. Across social media, financial circles, and online discussions, this question has sparked endless debates, confusion, and even conspiracy theories. Some call it a scam, while others believe it's a once-in-a-lifetime investment. But here's the truth: it's neither. What we're witnessing is simply the reflection of Iraq's current economic and political reality. To understand this, we need to explore the country's past, its economic challenges, and the fundamentals of global currency markets. By the end of this video, you'll know exactly why the Iraqi dinar holds such a low value compared to the US dollar, what that means for everyday Iraqis, and what to consider if you're thinking about getting involved with this currency yourself. Right now, the official exchange rate values 25,000 Iraqi dinars at approximately 48 United States dollars. While that may sound surprising, it's completely accurate according to today's global market rates. Too many? The number seems massive in dinars, but small in dollars, and that's where confusion begins. Exchange rates aren't random numbers. They represent a nation's economic and political conditions. In Iraq's case, years of conflict, sanctions, and instability have deeply influenced its currency's strength. For travelers, investors, or anyone curious about world currencies, understanding this exchange rate is key to seeing the bigger picture of Iraq's economy and how it fits into the global financial system. Back in the 1980s, one Iraqi dinar was worth over $3 US. Iraq's currency was strong then, supported by vast oil wealth and a relatively stable government. But a series of major historical events changed everything. The Iran-Iraq War in the 1980s drained financial resources. Then the Gulf War in 1991, and the harsh international sanctions that followed crippled the economy. Trade was restricted, oil exports fell, and Iraq's access to global markets was severely limited. By the time the 2003 invasion occurred, the financial system had collapsed, forcing Iraq to introduce a new currency. Although the new dinar stabilized local transactions, the long-term damage to the economy and global confidence in the currency had already taken root. Currency values depend on multiple interlocking factors. First, economic stability strong. Growing economies tend to have stronger currencies. Second, political stability. Investors and markets trust nations with predictable leadership and secure systems. Third, global demand. If a currency is sought after, its value rises. If demand is low, it falls. Iraq faces challenges in all three areas. While the central bank continues its efforts to stabilize the dinar, progress is slow. Political divisions, limited industrial development, and regional uncertainty make recovery difficult. These realities explain why the dinar's exchange rate remains far below the US dollar, despite gradual policy reforms. Another major factor is Iraq's dependence on oil. Oil exports are the backbone of its economy. When global oil prices rise, more dollars flow into Iraq, which can strengthen the dinar slightly. But when oil prices drop, government revenue shrinks and the dinar weakens. Political instability, ongoing security issues, and regional tensions also impact investor confidence. While some people online claim the dinar will skyrocket overnight, there's no credible evidence for that. Currency speculation, especially with the dinar's high risk. Many have lost money chasing unrealistic promises of quick profits, not realizing how unpredictable such investments really are. Let's also consider daily exchange rate changes. Currency values fluctuate constantly as part of the global Forex market, where banks, traders, and businesses buy and sell currencies 24/7. These small movements cause the minor variations you see, like 25,000 dinars equaling $48 one day and slightly more or less the next. It's important to remember that these numbers represent a moment in time. Tomorrow's rate might differ depending on oil prices, market sentiment, or political headlines. While the day-to-day shifts are usually small, they reflect a complex web of global financial interactions that determine what one currency is worth relative to another. There's been endless discussion about the Iraqi dinar as an investment. Some online communities claim it could suddenly increase in value, making holders rich overnight, a concept known as dinar speculation. The truth is, currency speculation is one of the most unpredictable forms of investing. No one can guarantee a major revaluation, and most economists view such expectations as unrealistic. Those who buy large amounts hoping for a RV revaluation often end up disappointed. Iraq's economy is still developing, and the factors driving its currency are far beyond anyone's control. Betting on sudden gains in this context is more gamble than strategy. To put things into perspective, Iraq isn't alone in having a low-value currency. The Vietnamese dong and Indonesian rupiah also have large denominations. $1 equals roughly 25,000 dong, or 15,000 rupiah. But that doesn't mean those currencies are worthless. It simply reflects how their economies and monetary systems evolved. What matters more is purchasing power, what money can buy inside that country. For example, 1,000 Iraqi dinars might buy a full meal locally. The confusion arises when people compare these currencies to the US dollar without considering local living costs or economic conditions. Looking ahead, several elements could influence the dinar's future. Economic diversification is crucial right now. Iraq relies almost entirely on oil exports. Developing agriculture, technology, and manufacturing could strengthen the economy long term. Political stability is another key factor. A unified, transparent government can boost investor trust and stabilize currency values. Infrastructure improvements such as power, transport, and communications would also attract foreign investment. Finally, better global partnerships and trade relations could bring in fresh capital and help strengthen the dinar gradually over time. For everyday Iraqis, the dinar's low value shapes daily life. People often carry large stacks of cash for ordinary purchases. Many businesses prefer the US dollar for stability, and banks offer dollar accounts to help citizens avoid exchange losses. Travelers to Iraq should plan accordingly. Cash is essential, as ATMs are limited, and card payments aren't widely accepted. Understanding this helps both locals and visitors navigate Iraq's unique financial environment more smoothly and safely. Let's address some of the most common myths. Myth 1. The dinar is artificially low and will suddenly rise. Reality. Exchange rates mirror real economic conditions and shift gradually. Myth 2. The US government controls Iraq's currency. Reality. The dinar's value is shaped by Iraq's own monetary policy and market demand. Myth 3. Buying dinars guarantees profit. Reality. Currency speculation is risky, and many investors lose money. Myth 4. A global reset will multiply your dinar holdings overnight. Reality. There's no factual evidence supporting such claims. Understanding these myths is vital for anyone considering involvement in dinar trading or investment. Iraq's situation is part of a larger global pattern. Many developing nations face similar struggles, reliance on one export, political instability, and slow reform all weigh down currency strength. Building a resilient, stable currency takes decades of consistent governance and smart economic management. Iraq is moving in that direction, supported by international partners and economic advisors offering technical guidance. This global cooperation is crucial for Iraq's long-term recovery and for gradually improving the dinar's position on the world stage. Understanding exchange rates is an essential part of financial literacy. A low exchange rate doesn't mean a currency lacks value, it simply reflects differences between economies. The Iraqi dinar remains valuable inside Iraq's economy, even if it converts to fewer US dollars. Comparing currencies without considering local context leads to false conclusions. By looking at broader factors like political stability, inflation, and trade, you can understand why the dinar sits where it does today. This insight helps travelers, students, and investors make smarter, fact-based financial decisions. If you come across claims of guaranteed profits from dinar investments, stay skeptical. Always verify information, cross-check reliable sources, and consult financial professionals before acting. Currency markets are volatile, and small political or economic shifts can dramatically affect a country's exchange rate. Staying informed is your best defense against scams and poor financial choices. Understanding the mechanics of money, especially in countries with complex histories like Iraq, is a key step toward responsible financial decision-making. In conclusion, the 25,000 Iraqi dinar to $48 exchange rate reflects Iraq's political and economic journey, not a scam and not a secret get-rich scheme. Its low value stems from decades of war, sanctions, and oil dependence. While improvements are possible over time, sudden jumps in value are highly unlikely. For Iraqis, travelers, and global observers, awareness and realistic expectations are essential for navigating this topic wisely. The story of the dinar offers broader lessons about economics, how politics, war, and policy shape a nation's financial destiny. Ultimately, the dinar's value tells the story of Iraq itself, a nation rebuilding after hardship, working towards stability, and striving for progress. The currency may appear weak in numbers, but it represents the daily lives, efforts, and resilience of millions. Watching Iraq's economy evolve means understanding that oil prices, political reforms, and international ties will continue to shape its future. For anyone interested in global finance, keeping track of these changes is key. Remember, 25,000 Iraqi dinars hold real value in Iraq today. What matters most is context, research, and informed perspective when navigating the world of currency and investment.